Good morning all, hope you're doing well. This is the COT data video for the week beginning 26th of February 2024. The euro was in a heavy decline and we have ticked up slightly higher from 52,000 to 68,000, so it was quite an increase. However, the dollar is just stable and it looks like it's treading water just above the zero line, so not especially weak, but that's of note on the euro. Alright, so be wary about shorting the euro because the big fish, the net non-coms, these are the banks and institutions, just that they have bid on the euro FX, not the euro USD per se, but the euro FX as a whole, as a basket of currency. So they have actually bought the euro, so be aware of that. Okay, let's look at the yen, and likewise, this is the first time I've seen it, so we'll explore it together. Oh no, the yen has dumped quite strongly. 111, 120. Well, 130 here is the bottom, so it's possible this is going to break, and then we're going to see some more BOJ intervention, and then we're going to get a little bit choppy and a little bit chaotic as well. So be careful across your yen, because if we break that low, they're likely going to try and intervene on the price. And when the BOJ come in, they come in very heavy. So be careful with yen. I'm actually avoiding yen for the last few weeks now. I haven't really regretted it because it's been quite a bit of a nightmare. It hadn't really respected the risk on or risk off flows at all. And it was like doing its own thing, which is a bit fundamentally skewy. So we'll take euro off and we'll put on Aussie. And you can see what's skewy about the yen is the Australian dollar moving in parallel to the yen, which is really strange. Okay, so Aussie has dumped. Where have we come from? So 71, minus 71 to minus 78, minus 81. So decreases over time, but it's just very strange about the correlation here with Aussie and yen. Okay, so be wary of the Japanese yen. I think perhaps the Aussie is making sense, but that isn't this one here. Aussie off, pound on. And we might have hit a little bit of resistance up here, so we ticked down quite a bit, 50,000 to 46,000, so it has come down. It has been on a bit of a rampage, to be fair, so this could be like a retracement, but however we can see we've got resistance up here, which obviously had a strong reaction. We made a lower high and a lower low, and we really had a very strong sell-off. And now we're coming up again, so that's of note. Bit of resistance for pound. CAD. Oh, okay. Are we above positive? Oh no, we're not. We're nearly there. Yeah, we're really nearly there. We're possibly going to get the dollar CAD set up where it's going to be UC sell, a dollar CAD sell, if the CAD line overtakes the USD. However, it tried here and it failed, and so we might see a repeat. Okay, so be careful. If we get across, we want to see a sustained move beyond, and the dollar is looking just like it's just quite mellow, and it could just pounce at any time. So we're above the zero line, and we have been for the longest time as well, quite stable. So be careful if we do get the cross. You might want to wait for the next week's COT data before you sort of enact a trade. CAD off, gold on, and a bit zigzaggy, isn't it? Really, we've actually made like a very strong. So you can see there's a Z. You can see that Z. So 131, 140. So we are strong. We're above the zero line, and we're further away from the zero line from the week prior. We've ascended ever so slightly, but we are zigzagging quite heavily there. It's almost like a Zorro Z. It's quite interesting. So obviously resistance up here, big resistance up here, and so we come up, we might struggle up here again. Okay, gold off, and New Zealand dollar. Okay, so New Zealand dollar has overtaken the USD, so we would be looking for NU longs. Okay, so be careful because there's obviously central bank stuff going on, and these guys are the humongous massive institutions pushing price, and it's possible that they're going to do something with their interest rate. They're going to hike, which is apparently likely. We put something in the New Zealand dollar channel, and there's some macro here. No, not USD. Oh, I might have put it in somewhere else, but anyway, yeah, I think I put it in the trading chart actually. Yeah, probably put it in there. Yeah, there we go. Tightening. They see a 25 basis point hike next week, followed by another 25 basis point hike. So 2 hikes. So that's quite aggressive. That's strong for the New Zealand dollar from a macro fundamental perspective. Okay, so the COT data aligns. So we'd be looking for New Zealand dollar longs, perhaps not against USD. It doesn't have to be against USD. It could be against any currency, but that we have seen a surge of New Zealand dollar positioning from the net non-coms. Okay, so that's of note. So be wary about that. There's probably a lot of people trying to short New Zealand dollar. They're going to probably get a bit skewed or screwed, shall I say. New Zealand dollar off and Swiss franc. And we're sideways. We can look at the New Zealand dollar positioning on the QDB sheet. So we come to New Zealand dollar, hence the flag, and they are really, really short. New Zealand dollar CAD, they're really, really short. There's only 4% long. There's only 8% long. There's only 6% long. It's 14% long. So the market, the retail herd, are very short New Zealand dollar. So that's probably going to be bad for these guys. So be really careful. And for some reason, they really went YOLO on the weekly change on New Zealand dollar CAD. See that big green area? So they really shorted it. So it's a strong buy. Likewise, pound CAD as well. And pound Swiss. So this is how you can use the sheet and the COT data together. And so we'd be looking for New Zealand dollar longs. However, we have to remember, we can't get to 0. It's impossible, right? We're 4%, so we're very, very, very extreme already. So we might see a reversal. So you've got to be really careful. We can't get to 100% short, 0% long. It's just that does never happen. So we'd have to be really careful at these extremes. And also, just before I wrap up, the open interest is massive. The amount of money that my FX book clients are pumped into the casino is huge, because we were 100,000 maybe about 4 weeks ago, and it's 50,000 on top of that. So I'd say 110 was normal. We're well over, like, above average. So the retail herd have probably got paid from their jobs, and they pump money into the casino. So that's interesting, in so much as that it's really, really increased. And now what the likely scenario is that these guys aren't going to be making money, they're going to be losing. So we're probably going to see quite a lot of moves this week due to the open interest increase. Okay, and it goes to show that the retail herd have got paid and put more money into the MetaTrader 4, MetaTrader 5, and that's really increased. So we're probably going to see some big moves this week, and it might try and extract some of that capital away, and we'll see this increase or decrease. Now, decrease would be normal because they'd be losing money. So we'll have to keep an eye on that this week, but that's quite high. I think that's really high because they've actually got physically paid. They've got money in their bank accounts and they've funded their accounts, or shall I say refunded them. You know, they've lost money and they put money back in. So that should decrease by the end of the week. Okay, and that's it. So I'll speak to you guys soon. Remember to trade safely, and we've got patreon.com as well, so you can join us for free. And we've also got paid plans as well. You can join us for $5 a month, and you get access to all the videos and the spreadsheet, but not this spreadsheet. You get access to a basic one. That's it. So be sure to join us for free. It's not going to cost you anything, and I'll speak to you soon.